Hello everyone, welcome back to the channel. Welcome to the new room. This will be the new studio. As you can see, we're still doing some stuff. We've been unpacking. I put some shelves up, if you can see behind me here, and I got one on the other side. We've taken down kitchen cabinets. We've been very busy remodeling the place, even though it's a new home. But you know, it's actually really nice because you don't have to demo. It's just, you know, take it out, put it in, everything's already nice. So, you know, after owning 2 homes and getting a brand new home, this has definitely been an experience. So it's been very nice to have a lot ease of not having to worry about demo and then remodeling. But I appreciate you guys being back here. We're gonna be going over the final numbers for 2024. I'm not gonna go over January's numbers. Those numbers are out, but I'm gonna wait till February just so we can give January some time to brew. I've been looking at some data here, and interestingly enough, prices went up. And so I decided to look into why that could have been. So we'll go into the detail later on in the video. We'll be covering Tampa and Orlando today. If you're interested in looking at Miami again, or maybe somewhere else, like again, I guess any other videos, leave them down in the comments so that way I can look at them and then review them for you. Like I said, I'm here for you guys. This isn't about me. This is for you. I want to get you guys on your your real estate path, your journey. Wherever you're going. If you're planning on moving down here to Tampa, to the Tampa Bay area, or if you're looking to move into Central Florida as well, like I said, I do have a team that is around the entire state, so we can help you anywhere you'd like. But for me, I'm here in the Tampa Bay area, going a little bit south towards Sarasota, and then if if it is something you're looking for in Orlando, I do know the area. If you're a real serious buyer, definitely, or a serious seller, yeah, definitely give me a contact. Give me a call, 407-801-1661. Be happy to sit down, have a conversation with you, and we can figure out what's the best way to get you to where you want to go. So without further ado, I hope you guys enjoy this video. If you do me a favor, please like and subscribe, so that way this video does get out and the algorithm gets a little tickle in there, so it can spread these videos out. Share them out to them, please, if there's anyone that who's looking to buy or interested here in Florida, looking to sell. If you can do me a favor and share these videos, so that way the message gets out, so that way people are more informed about what's going on here in Florida and the housing market. I'm sure I greatly appreciate that, and I'm sure they will appreciate it as well, and hopefully you guys appreciate my perspective here. So let's get into the numbers here. The Tampa Bay area, we're going to be starting there like we normally do. We'll start with the hard numbers, we'll break down some charts, and then go from there. And then after that, we're going to hit the Orlando market. So for the Tampa Bay area, let's see here. We are closed sales. We are up 21% year on year. Percentage of that cash of sales, and I'm going to be dipping into this a little bit later on as to why I think prices went up on this one. So cash sales were up 17.8% year on year. Cash sales as a percentage to closed sales were down 2.5% year on year. Median sales price, we're actually flat here in the Tampa Bay area year on year at a 0% increase, but the average sales price did dip a little bit at negative 2.8%. A median price of original list price, a little bit of a tongue twister. We are down 0.9% from 96.9 to 96%. Median time to contract, we're up 51.9 days from 27 to 41. Median time to sale, we're up 18.8 days from 69 to 82 days. New pending sales, we are at 9.5% from 2,463 to 2,696. New listings, we are up 22.5% from 2,723 to 3,335 active units. And then we are up 30.3% on active inventory from 8,568 to 11,162. Pending inventory, we're down 7.8% from 3,414 to 3,148. So as you can see, new listings are definitely outpacing the buyers right now. The sellers are putting more houses on the market right now than buyers are interested in purchasing. But overall, we are at up 34.6% year on year in active inventory from 2.6 months of supply to 3.5 months of supply. Let's dig into the Orlando market. Let's just go right to the charts here. So we're gonna go into this one kind of heavy. If you have, I should have told you this in the beginning. If you got a favorite drink, you got a favorite snack, if you need to press pause, go and do that. this one's going to be a lengthy one. We got quite a bit to cover. So I want to break down the active inventory because, again, as you guys know, I've been telling you how the median price works and how you find it in the middle, right? So as we can see what our active inventory is at, we are still getting, you know, some units on the market right now from, you know, $250,000 up to 300,000. And then, you know, the luxury, more into the luxury area, you're going from 600 to $1 million. We still have a little bit of decline in there. And then also from 300 to 400 and 400 to 600,000. As you can see, the active inventory is falling off a little bit, especially right here. And this is where I was trying to tell you, like, where the median price is coming, as always, because this is where the most transactions are happening, at least in the medium range. So that's where the median is going to come, as these transactions lower will help pull it down. The ones that are higher will pull it up, and then it'll go from there. So let's continue going on here. So as far as closed sales goes, I was interested in this because we had an uptick in closed sales. So I wanted to look at that from year on year because that was interesting. And it looks, you know, we're up quite a bit from 780 to 1,010. And let me show you this as well. So I was looking at the interest rates to kind of see, you know, what happened in December for us, because we had interest rates climbing pretty much all month, right? And I was like, why? How is it that we had more closed sales currently this year before then? And then I got to thinking, well, let me look at the cash sales. So as a cash sales percentage of closed sales, that also ticked up. So what that told me is that people were just paying cash. And if we go back to the numbers, we are down 2.5% year on year, but we're also up 17.8% on how many people were offering cash offers, and, you know, versus what was closed. So people still have cash, and you know, I keep track of, you know, I'm subscribed to a lot of things, and I get a lot of notifications. And December was a huge liquidation month. A lot of people took gains on stocks. A lot of people took gains on crypto. I think Wall Street Bets had sent me a notification saying there was like $27 billion liquidated in cryptocurrency alone. And in my personal opinion, that's also one of the factors that, you know, pushes inflation a little bit right now too. It's a little bit different than in the past. But I'm thinking that's exactly why we ticked up in closed sales, because of the amount of cash sales that were happening in transactions year over year. And, you know, people just, you know, the wealth effect, people are feeling wealthy. They're going to, you know, cash in on that money and put it somewhere else where they can enjoy it. You know, assets are great, you know, on paper, and, you know, as far as like crypto and stocks and all that, but you can't really enjoy those every day, in my opinion. You know, real estate, you know, the house, you enjoy it every day of your life. Obviously, there's going to be some days in there where it's a pain and it's a headache, but overall, I feel like it's more rewarding, you know, asset class than the rest of them. But, you know, there's obviously definitely more benefits of having those type of assets as well, because, you know, you might get lucky, hit that meme coin, and, you know, you get your lucky lottery ticket there. So as far as going further on here, I wanted to also look at the median percentage of a risk and a list price, because of kind of what the market was doing with the pricing. Obviously, we've seen that sellers are not getting what they're wanting currently for what their price. So I wanted to go back to 2008, right? Because great financial crisis. So I wanted to compare the dollar volumes of today versus the dollar volumes of back then, because we were still rolling off a bit of the peak back here from 2005, I believe was the peak. 2006 was the market. So we're starting to have some rollover. And as you can see here, I want to break it down. Yeah, and if you notice the dollar amount values here, on the bottom, I went from 150 to 200, you know, all the way up to $400,000, just only because the prices back then were, you know, more realistic compared to what it is right now, as far as how do I want to word this? As far as being able to not like necessarily qualify for a loan, but what's mostly available on the market. That's what I'm saying. What was mostly available on the market at that time. So if you look here, it's almost like an inverse happened. If you look at the 150,000 range, right, you had a lot of people getting anywhere between, you know, the mid to high 80s to the low 90s, you know, for the $150,000 mark and beyond. Now, you know, they're getting 88.4%, 90%. So, you know, almost GFC levels. But this is telling me, given the current market conditions we're in, this is going to be more of the distressed sales. People will probably, you know, have maybe scraped it for land, you know, something like that. But I'm gonna guess that this, you know, we're having the inverse. You see, this was ticking up, where now this is on the downtrend. So less supply, but possibly a lot of distressed sellers who are having to take haircuts because, you know, the hurricane damage possibly. But as you see here, you start moving up the price range, though, you're having that inverse relationship from what was back then to what it is now. So, you know, back in 2008, $200,000 house to $250,000 house, you're getting 93%. You know, not back then you were getting 90% of your original ask price, and as you keep climbing higher, the more of the price cut was happening at that time. So anything listed at $250,000, you know, you're getting 86% at that time, where now you're getting 95, and so on and so forth. You know, you get into the $300,000 to $400,000 mark. You know, you were down to 85% at some point, and now you're getting 96. So what this graph is telling me here is almost like an inverse relationship of what's happening and why prices aren't coming down. Like a lot of YouTubers are, you know, the prices are going to crash, and if you've seen me, you've been watching me, you know that prices can't crash unless this amount of inventory ticks up, and also the one under it. And let's just take away these two to give more of what we would call more affordable housing. Okay, so if you've been watching my videos, you know exactly why housing prices haven't crashed, right? Because you see how much inventory was back during the GFC. You had, you know, $150,000 houses, $100,000. You know, you almost had 6,000 units. Now, you know, you're at 37. So it's just, if you're not getting the uptick in inventory in these dollar amounts, the median is just not going to trickle down. Prices aren't going to come down any meaningful way. You know, there's a lot of people that say, you know, you clicky YouTube thumbnails, right? You see, 20, 30%, 40% housing market crash in 2023 or 4 or 5, you know, whatever it might be. But realistically, it's impossible. Like, it's not necessarily impossible. Anything is possible, but it's just very unrealistic to say that, because it's never happened before. Real estate doesn't move that fast. Like, it's not a stock market where people can just instantly sell off. You know, it takes time to liquidate houses, and, you know, if there's no buyers to pay at that price, then they're not going to pay for it. And if there's a lot of demand for the lower housing prices, then that's going to bring them up. You know, but, you know, I have said that there could be a correction about 20%, you know, due to the insurance and the tax fluctuations that are happening here in the States. So again, anything is possible. Like I said, I'm going to hold on to that one, but like I said, that's not going to be, that's years down the road. I'm not saying that's going to happen this year or next year. You know, it might start this year, and maybe we'll bottom in 2028, 2029, and then we'll recover in 2030. You know, that's kind of, if my projection were to be that, you know, that's how I'm going to present to you. There's a 20% housing correction, you know, for the next 4 or 5 years, not this year. So I like to keep it realistic, just because I'm not here for views, guys. Like, I'm here for views in the sense of I'm trying to get this information to you, but I'm not trying to make clicky, face dropping, oh my god, the world's gonna fall apart headline thumbnails like that. Okay, so what I want to show you on this chart here is the amount of closed sales. So in the closed sales, you know, the price, you know, it stayed flat as far as the dollar amount was concerned. You know, as we see here, you have an uptick going up in these categories. So, you know, this was kind of pulling it down. This price range was pulling it down, but this pulled it up, and then this pulled it up, and we ended up going flat over the course of the year. So I showed you the original list price. So here's the median price. And you guys are seeing, I don't know if I remember pointing this trend, but there's a possibility that we're gonna maybe see a flat, you know, decade There is a couple other YouTubers who are talking about that too, putting that out, that we're probably just going to have a flat decade with maybe 2 or 3% appreciation year over year, which is actually normal. Real estate, this was a phenomenon for real estate to tick up that fast. So it was an anomaly, but it happened. So I think, like I said, I told you, with trajectory, right? Where's the trajectory of the bottoms, and you can kind of find, where. So I think, if I'm honest with you, I think maybe 2026, 2027, this sideways might start going back up again, depending on what's going on in the economy. If we hit recession, prices could go negative a little bit. If we hit stagflation, expect this to go sideways. But if we hit an economic boom, and suddenly people are getting higher wages, things like that, a lot of growth in the economy, then this price could continue going up even at these rates, because wages are compensating for the amount of money that people can afford to pay monthly. We'll see where that goes, but we've definitely been having a sideways market for the past 5 years. So I definitely think prices are starting to are coming into balance, which is what the Fed's looking for, not necessarily in housing, but just overall in general. So this is going to help their year-over-year shelter inflation rating as well. But rents are definitely going to have an impact on that as well. So average sales price, again, we're kind of sideways. We're bouncing out this little bottom here. And we'll see what January and February looks. Well, yeah, once February comes around, well, technically March, you'll see me in March, because we're in February now, and the numbers won't be till mid-March. So we'll see what that looks like then. So cash sales, this is again what I wanted to see, why prices really didn't come down, because if you saw, I was saying that prices were going to come down October, November, December in previous videos, but they ticked up, and if you can see the amount of cash sales that happened this year, while it's not that many, you can see from the past it's definitely higher than the years before. So that's been pretty interesting, other than 2020, because everybody was leaving. Everybody was flocking in 2020 in December, that's for sure. So I just wanted to show you that, because it's seasonally it's a little bit higher than it should be, unless it looks like we had quite a big of a boom here too. I remember there was an article I read, I believe I mentioned to you guys in the previous video that there was a good migration that came in, and I believe that's here. I've met quite a few people from out of state who said they actually moved around this time period. So they moved in with some real estate money, and they were purchasing. So that's why we have that in cash sales. But this, I believe, is liquidation on assets. Okay, so let's get into the Orlando Kissimmee market. So let's just go right into cash sales. We are up 15.3% year on year, from 2,068 to 2,384. Cash sales were up 13.5% year on year, from 452 to 513. Cash sales as a percentage of closed sales were down 1.8%, from 21.9 to 21.5. Median price were actually up again, 1.3, from 439,995 to 445,745. Average sales price though did tick down 0.5%, from 534,795 to $532,262. Median percentage of original list price, they were getting just negative 0.6 year on year from the difference, 97.3 to 96.7. And then median time to contract, we are up 27.3%, from 33 days to 42 days. Median time to sale is up 20.3%, from 74 to 89 days. New pending sales, we're down 3.5%, from 1,846 to 1,781. New listings, we are down actually 0.8%, from 2,150 to 2,153. So that's interesting, but I'm going to show you guys live data as well here in a little bit, and that'll clarify kind of, while this doesn't look as good here, you're going to see here what's actually happening live here soon. So pending inventory, we're down 9%, from 2,568 to 2,337. Active inventory, we're up 31.6%, from 6,649 to 8,752. And months of supply and inventory, we're up 37%, from 2.7 months to 3.7 months, and we are continuing that trend of kind of shifting into a buyer's market. And depending on what property you land on, buyers got some negotiating power now. We're going back to that stabilized market, something normal where buyers are being able to negotiate again. Past 2020 to 2023 was beginning 23, end of 22. Sellers had all the power. Like they were waiving inspections, buyers waiving inspections, and sellers, they didn't have to ask for anything, so they were in complete control. Just want to go into active inventory for the charts and a couple of the other segments that I covered earlier with Tampa. So active inventory, again, we're seeing little amount of inventory here at the $250,000 to $300,000 mark, and then we got this amount of inventory, and they're kind of crossing the line with luxury. They're actually right on par with each other. And then the $400,000 to $600,000 units, those kind of crept up as they were getting absorbed or taken off. There was quite a bit of cancellations as I was looking through my MLS. There is a little bit of absorption and cancellations or temporary withdrawals as well. That could bring this rollover as well. But we will see what the future holds with that, because I am sort of a believer that people are holding off right now on listing their homes, even though it's a high rate compared to what is being sold. Now, again, I'll show you that later. But I do think that sellers are holding off till this spring, and they're gonna not list as early as usual because of the rates. I do think that people think that, because, again, not to be political, because anytime I think about money, finances, and the economy, I try to take my politics hat off and just put my investor hat on. Forget about emotions, forget about politics, and just thinking about the financial aspect of it, because once you can remove the politics and the emotion out of it, then you're actually able to kind of help guide you better financially, at least in my opinion and in my situation. So, well, not necessarily my situation, but just how I look at my financial road and how I need to navigate it. So anyway, so I do think because Donald Trump did announce and demand that he wanted the Federal Reserve to drop rates, which they could drop rates again. The last time that happened, rates went up. So again, don't think that the federal funds rate is tied directly to mortgage rates, because as we've seen that they stayed flat. The Fed hasn't moved at all, but rates have been still ticking up, and that has to do with a lot of things that are going on in the economy, not only here in the United States but also globally. So just don't think that rates will come down just because the president says that he wants them to come down, and so does the rest of the Senate. I was listening to them this morning when they were talking to Powell, interviewing him and questioning him, and all of them want rates to go down. I mean, most of them want rates to go down. Some of them want them to stay where they're at because we are possibly finding our neutral rate. Like, we could have possibly seen our soft landing, and we just don't know it yet. Obviously, inflation's sticky, but if it's going to be 2%, stay somewhere where they're staying neutral. They're not stimulating the economy, and they're not hindering the economy from growth. They're trying to find somewhere where they can just keep the rate there, and the economy was just going to do what the economy is going to do. The market's going to speak for itself. So a lot of people are focused on 2%. But if you actually listen to him talk, he talks about how it's over time. They're looking for an inflation rate around 2% over time. So if they're looking for just a 2%, like it's probably never going to happen, and if we have to hold rates that long, there's a good possibility that we could enter recession because the economy was just holding off that strong for whatever it may be. But anyway, enough of that. Let's get back to it. So the closed sales, again, we did have an uptick in every price range here. Again, it was a liquidation, and I just want to show you again the Decembers on how much different it was from the year prior this year, or from this year compared to the years prior, where they're closing at. So if you're looking here, I'm not sure if you're 21, right? So that makes sense why they were closing more back then. But so if you're not watching and you're listening to this, maybe take a second to kind of look at the numbers when you get a chance to revisit. But you can see as we take back, looking back in time, December's closings were a lot less amount closed sales in the wintertime, which is very average. I mean, look at historically, we didn't really close that many sales in the wintertime, and now December we have actually probably one of the highest closing rates outside of 2021. Yeah, 2021 was the highest amount of transactions ever in the city of Orlando, in the metro area at least, for the off-selling season. So if that tells you anything, a lot of people, still had a lot of money. Again, end of the year, a lot of liquidating, and trying to roll it into a different asset class. And so again, just kind of breaking down what I showed you before, right? The bifurcation between how much of the dollar amount of inventory is available at the market. You can see how much they're getting their original sales price as a percentage of that. So it's completely flipped on the other side. I'm really surprised, honestly, and I would like to know, again, distressed properties for sure, but since we're in Orlando and Kissimmee, like for Tampa Bay area, that makes sense. But I'm really curious what's going on in Orlando for this to happen, because the only thing I can think of is a really distressed property, because it's January 2024. You're getting a 15% haircut on that deal. Like, you got a good deal, and that had to been some sort of distressed selling. But it's just really interesting how it's that dollar amount volume versus anything over $200,000 is where they're getting more, from 95 on up, compared to the lower dollar amount. So I'm going to have to do a little bit of digging and kind of see what variables influence that metric. So to continue on, again, we're kind of flat, but that year over year appreciation, like I was saying, right, maybe 2-3% flat year. So as we saw earlier, we did take up just a little bit in the Orlando market, but not too much. And then the average sales price, again, we're moving sideways along as well. So I wanted to get into a couple different things. Obviously, as you guys would tell, so I want to show you some live data. Currently right now, the 10-year treasury rate is at, might just call it 4.55 at the moment. So rates have been on a slight uptick as well. Definitely, we've seen a large amount of uptick, through December into January, and we had a little bit of reprieve here. But if we zoom out just a little bit, and I want to go out 5 years, you can see that we're going sideways with rates right now. And if you notice how far back we've gone, rates haven't been this high since, well, they've been, let's just say for this decade, right? So previous decades haven't been high since about 2006, 2007. So we'll see how long the Fed lasts until something happens where they're forced to cut rates. So if you start seeing this number, for whatever reason, falling very quickly, and let's just say this gets under 3%, right? Let me see, 3%. Yeah, if it gets under 3%, something happened. They're not going to tell us, but something happened. So if you see this under 3% or getting close to 3%, if you're in cash, you're gonna be okay. Okay, so I want to show you some live data of what's going on right now in the residential market, and just so that we know what we're looking at here. This is going to be the Orlando metro market, Lake Orange, Osceola, Polk, Seminole counties that surround the Orlando metro area. And so let me give you some live data here. So I have been watching some other YouTubers, and they have been talking about how new listings aren't really coming up, and how the market's catching up to new listings, and we're down a lot less than before, and that is true. That is true, but we have to look at the bigger picture, right? So yeah, maybe active listings, again, what I was saying, that people are probably holding off because they're going to think that interest rates will fall in the future, and they very well could, but more than likely there's going to have to be some sort of stress in the economy for that to happen. But if the market sees that there's possibly any inflation pressures, or it's sticky, or unemployment, unemployment is, and it's kind of double-edged sword with unemployment, because if it's too low, that's bad. If it's too high, that's also bad. So if it's too low sometimes, though, if it's low, it's good, but if it's really low, it's bad. But if it's high, that's bad, because that could be, a sign of an increase of inflation. So, the market's going to do what it's going to do, and it's influenced by very many things. But anyway, so new listings, we're up, we're almost at 1,300 new listings for the month, for the week, for the past 7 days in these counties. And as you can see, how many price decreases again. So this is telling me, with the data that we're looking at, obviously we'll go in February when that time comes. But looking kind of in the backwards data, what this is telling me is that while there's this many price decreases, the sellers are still getting 95% of original list price. So they're just overpricing their houses. So yeah, there is a dramatic amount of price decreases, but the amount that it is there to get to where it needs to get sold, that's why we're seeing prices going sideways, because it's too expensive right now. There's not enough qualified buyers. So you're kind of having this fight between a hard place and a rock, essentially. But things are still getting sold. As you can see, the demand is still there because people want to buy. We're almost at a 1-to-1 ratio there with pending to new listings. But when it comes actual time to close, only not even half of those listings are actually getting taken off the market. And then again, you're getting 300 extra units back on the market on top of this because they came back on for whatever whatever reason the buyers fell out for whatever came up on the leasing. You have some withdrawals, you have some cancellations, right? So this is all future inventory. This is a temporary off market, so again, future inventory. So inventory still increases. I definitely still am going to say that inventory is going to keep increasing and increasing because of the insurance rates that are going on here. The governor said that there was going to be some reprieve in insurance rates, but I think it's going to be like 6 or 7% for citizens, which isn't much overall the increase that we have seen. So I don't see any actual true reprieve and help in the insurance market here. So I'm going to say that this is going to continue increasing, but like I'm saying, please believe that there is a lot of people still moving here, and that eventually we're going to get a bottom. We're going to eventually get a bottom into the amount of demand being pulled away and then coming back in. So again, this could be a very sideways market for a while until something happens where we're stimulated, or maybe we are coming out of a recession, or maybe we have some sort of economic boost. Again, the president's talking about getting rid of the federal income tax. So if we impose the tariffs, but then get the income tax taken off, then that's going to be a lot more money for people to have in their pockets for them to be able to spend and stimulate the economy. 25%, does sound a lot on some things, but if you think about it, it's on consumption. So it's like a consumption tax instead of, automatically coming out of your paycheck every week or every 2 weeks, depending on how you get paid. So, if you think about it, if you're not buying those products with those tariffs, then you're not going to get hit as hard compared to, let's say, if you're getting hit 10%, maybe 22% or even higher, depending on your income level and your taxes. So, if we come off the income tax, there could be a pretty big boom in the economy because there's just going to be that much more discretionary money, just floating around that people are going to spend because we're consumers and we like nice things, we like luxuries. That could be another stimulant to the economy. And I hope it does because there's a lot of people in financial stress right now, and they're not paying their bills. People are delinquents on their people are foreclosing. They're not paying their rent. They're not paying their credit card bills. Their cars are getting repoed, and that sucks. It's a bad situation to be in. And being able to get that income tax money, in your pocket and staying in your pocket, that's going to help a lot of those people in distress out because now they're going to be able to pay their bills, and then you got people coming off student loans as well. And now they're at an increased rate of interest compared to the way we were back then. So, I think I'm a strong believer that getting rid of the income tax is going to definitely benefit the American people, and also kind of level out the playing field again. Not being political is just putting on my investor hat, my entrepreneurship hat, setting my emotions and politics onto the side, because you gotta be able to do that. You gotta be able to control your emotions and know how to navigate certain things. But overall, I'm gonna agree and disagree with every president, just like we do with people in real life. It's just part of natural life, and that's okay. We can't agree with everybody with everything, and that's completely normal. Okay, so let's get into the Tampa Bay area. So just so we are clear on what we are covering right now, we're covering the three. Oh wow, excuse me. So we're going to be covering the three counties around the Tampa Bay area: Hillsborough, Manatee, and Pinellas counties. There probably may be a couple of them. I'm newer to the area. I'm still figuring that out. But if there is, and if Sarasota is counted as the Tampa Bay area, I wouldn't think so because it's not in the Bay, so I don't ever include it. But if it is, and let me know in the comments so that way I'm learning as well because I want to learn as much as I possibly can from anyone. So yeah, we're going to be covering those three as well. So new listings were just over 1,000. Price decreases again, as you see, massive amount of price decreases because people are overpricing their homes. 1,558, 530 units sold. But again, you're having that back on market inventory getting stacked on top of that. So, and then your cancellations, temporary withdrawals, and then your pendings, almost again at a 1-to-1 ratio. So Tampa Bay and Orlando Central Florida market are almost having a 1-to-1 relationship as far as demand goes. But again, what gets closed, for whatever reason it doesn't get closed, it's the inventory stacking up. So we're pretty much on the same trend. So we'll see again. Active inventory I feel like is going to continue climbing into the future. So it's going to get interesting nonetheless. rates. Oh wow, that's even interesting. So even at the time of this video, interest rates ticked up just a little bit. So all right. So yeah, some interesting things that are going on right now. Pretty much we're staying on where we're at with inventory increasing still, while sold is just not very many closing all the way. So we're at 50% of closing range. So it's going to be an interesting year, 2025. I definitely do feel like if it is your time to sell, make sure you're pricing it right. Again, we can have that conversation when we sit down. I can go over with you what is trading around your area, so that way you're pricing your house accordingly. Because I mean, if you have somewhere to go and you need a place to be and you're not pricing the house accordingly, they're going to sit on the market for longer, and that actually is a disadvantage if you leave your house on the market for too long. So I definitely advise pricing it right the first time, instead of overpricing, because you might actually leave money on the table by doing that. Sometimes it's not as when the market's shifting, it's not as what would you call it? Strategic as you would think, because the market's shifting. So as you can see, yeah, we're getting price decreases, but as I said, the prices are still going pretty much flat across of it, or just a little bit of a loss, a little bit of a gain. So if you're pricing your house right, it's getting sold, pretty close to what you like, you're looking for, being realistic. So if there's anything else you guys need, I appreciate you guys being here today. You could have been anywhere else in the world, but you're here with me right now. I know this is a long one, so I appreciate you being here. And I will catch you on the next video. I did shoot a different video on my phone that I'm going to upload here shortly. I'm just waiting for approval on it, so that way I can get uploaded. I do have a special announcement that I'm going to be making in that video to help buyers if they're thinking about buying here in the Florida market. In new construction more specifically, because I want to try and help them out. And so if you are thinking about moving over here, give me a shout, because I want to help out my fellow Americans. You guys are struggling out there, and my heart goes out to those people who have lost their houses in the hurricanes. Here in Florida, to the Carolinas, the people out west from the fires. And some landslides. There's just a lot of natural disasters going around this country right now. Colorado, fires as well. Texas, they have some things going on too, the tornadoes and out that way. So we have houses here. There's a lot of new construction going up, and it is more affordable in the insurance realm if you are a little bit a little bit weary of purchasing, because of Florida. I completely understand. I'm right there with you when we were making our first purchase. But again, the insurance cost is definitely a lot cheaper here, in a new construction versus a resale. So if you do need help with that, get a hold of me, because I would like to have a conversation with you on how I can help you out with purchasing your new home here in Florida. This is my way of trying to give back, because unfortunately I don't have the time right now to give back, but I can give back in other ways. So please reach out to me. I want to help you out. I want to find you shelter. I want to find somewhere to call a place home, and have a roof over your head and walls around you to protect yourself and your family. So reach out to me if you are interested in more details on that. My phone number is 407-801-1661. Again, anywhere in Florida, we can help reach an agent for you, or anywhere in the country. I do have referral partners. I'm developing those now back in Michigan. So even if you're in Michigan, you're watching this, if you need some help finding an agent up there, give me a shout. Or even around the country, but like I said, people that I know personally, back from Michigan, good friends of mine, will be happy to help you out. So I hope you guys found this video worth of value. If you did, again, please like, subscribe, share. And I'm going to be having a new construction video coming out. I want to take some time on that one, because we're running into a few things around the house, and I want to make like a full, very transparent video for you guys, so that way you can see what issues we've been running into, and they're not anything major, just really minor cosmetic things. But I want to show what things you can run into in a new construction home, because obviously you're gonna go through the reels. I've seen them. Home inspectors are great, definitely needed. But I just want to paint the picture that not every case is the same. There obviously are a lot of people who have negative experiences with a new construction home, but think of it this way too. You have negative experiences with resale homes, and you have a lot of people regretting to buy their house right now. But the nice thing about buying a new place is that, you know everything about the house. As far as, all the original documentation you get when you close, and then also the history and the people who worked on the house as well. You know everything from the beginning. So, yeah, it is cookie cutter. It is, the HOA, they got some rules. Luckily here, they're a little bit more lenient. Well, the neighbors are, the HOA, they're not as strict, but there's some rules, and, everyone's doing their own thing, which I can appreciate because, I got my own thing going on, and if, I'm very liberty-minded, free person, so, like, as long as you're doing your thing, I won't bug you, as long as you won't bug me, so on and so forth, right? So I feel like that's probably the best way we can all get along, just live our life freely and, kind of just mind our own P's and Q's. But anyway, so yeah, like I said, if you guys need some help, 407-801-1661. And again, you could have been anywhere in the world, but you're here with me. I appreciate you. Thank you. Have a great one. Bye.